Hey viewers, you're watching The Savera and I'm Vidhi Joshi. The Income Tax Department has officially enabled the online filing of Income Tax Return ITR Form 3 for the assessment year 2025-2026, making it easier for individuals engaged in business, professional services, share trading including futures and options or those with investment in unlisted shares to file their tax returns through the e-filing portal. As per the latest notification by the Central Board of Direct Taxes, ITR-3 is now applicable to individuals or Hindu undivided families who have income under the head profits or gains from businesses or profession and who do not qualify to file ITR-1, ITR-2 or ITR-4. The form must be used by a broad category of taxpayers including company directors, partners in a firm, individuals with income from salary or pension, rental income from house property, capital gains, both long-term and short-term, income from foreign sources or foreign assets, and income from other sources. Anyone who has invested in unlisted equity shares or whose total income exceeds Rs 50 lakh will typically need to use ITR-3. The form also accommodates taxpayers whose residential status is either resident, that is ordinary or non-ordinarily resident, or non-resident. Several key changes have been made in the ITR-3 form for assessment year 2025-2026 following the amendments introduced by the Finance Act 2024. One major change is the requirement to confirm whether Form 10 IEA was filed in the previous assessment year, that is 2024-2025, and a declaration must be made about the taxpayer's choice to continue with or opt out of the new tax regime for the current year. Another significant update is related to the reporting of capital gains transactions, which now must be disclosed separately for those executed before and on or after July 23, 2024. This change follows the revision in capital gains tax rates, wherein long-term capital gains on both financial and non-financial assets are now taxed at 12.5%. up from 10%, and short-term capital gains on certain assets like equities are taxed at 20%, up from 15%. Resident taxpayers are now required to provide separate details of the cost of acquisition and improvement of land or buildings transferred before July 23, 2024 to properly apply indexation benefits. Additionally, the threshold for mandatory disclosure of assets and liabilities at the end of the financial year has been increased. Taxpayers now need to disclose such details only if their total income exceeds Rs 1 crore, up from the previous limit of Rs 50 lakh. This requirement excludes those who are already providing a full balance sheet under Part A of the form. The updated ITR-3 also incorporates changes in Schedule CG to reflect new provisions allowing the reporting of capital losses incurred from company share buybacks. These losses are permitted only if the corresponding income is shown as dividend income under the income from other sources head, in line with Section 2, Subsection 22F of the Income Tax Act. Furthermore, a new reference to Section 68 of the Companies Act 2013 has been added to support the reporting of these buyback-related losses. The revised form introduces a new provision under Section 44 BBC for presumptive taxation applicable to income from cruise ship operations. There is now enhanced reporting required for claiming deductions under key sections such as 80C and 10 subsection 30A. And taxpayers must also indicate the appropriate TDS section codes in the scheduled TDS section. These updates are now reflected in the Excel utility version of ITR-3 as well, and all the taxpayers are required to use this form and are advised to begin preparing their documents early to ensure accurate and timely filing. The online availability of ITR-3 simplifies compliance for a wide range of taxpayers, particularly those with more complex income situations that do not fit into the simpler ITR forms like Sahaj, ITR-1, ITR-2 or ITR-4. That's all for now. Stay tuned to the Savera for more updates. Do like, comment and subscribe to the channel.